Welcome to the December 12th, 2022 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group Asset Management, and your financial weatherman with your weekly fast-paced global tour of the financial markets designed to help you make great decisions in the year ahead. A team of 10 McGowan Group Wealth Management actually here all week long preparing the broadcast that's at Apple Podcast under NetWorthRadio.com, and of course YouTube McGowan Group. Yes, I urge you to subscribe because we give you the best fast-breaking news each and every week that really matters for investors. This update is designed for our clients, and we are proud to bring it to you on YouTube as your weekly client update. McGowan Group Wealth Management serving affluent families with expertise as portfolio managers. We're grateful that you're here. Here we go with the S&P 500. So no secret, S&P 500 is down for the year. It's a minus 16% after this week. The low was about a minus 26%. So that's a bear market cycle that we went through in 2022. Happens to be the second major bear cycle in just 3 years. Wow. So let's talk about what's working and what's changed. You may have heard the term inflation. Well, I'm going to make the case for something that is inflation friendly, but I'm also going to make the case that inflation may have actually disappeared starting in July. And I'll show that to you coming up here. All right, so that's the minus 16 on the S&P. What's going to happen to corporate earnings? Morgan Stanley came out and said earnings next year for the overall S&P could be down 10%. Well, what happens after that? Here, you can see earnings coming down for 2 quarters. And the forward forecasts begin to restore that by the middle of 2023. And you end 2023 with earnings at potentially a record level. Now, these are the analysts that are in Bloomberg, and the analyst estimates are updated each and every week. We're going to keep an eye on that. If this is true, then it says earnings have taken a pause and then they're going to resume. But where is the money being made inside of the S&P 500? Well, these are the pipelines. They're up 26% so far this year with a nice yield of about 7%. That's a good category. That's a clue for where you want to be because energy infrastructure is very inflation friendly. Think of it as real estate at 6 or 7 times cash flow, which is always considered a bargain, and they're raising those cash flows. Medical dividends have been strong this year. I'm going to make the case that inflation has actually come down. What is this? This is the used car index. Okay? Remember, there's a big shortage of used cars. Well, 15.5% down in used car prices so far this year. That part of that is the effect of the Fed tightening, making financing much more difficult, and used vehicles have already taken it on the chin. When GM and Ford and the other automakers, now that they've solved most of their supply chain issues, when they get the chips put in the trucks, there's going to be potentially an oversupply of vehicles according to UBS in 2023. The consumer is stretched. And of course, you've heard looming recession, slowdown. Growth is projected to slow to about 0.5% next year, an anemic growth rate for at least the biggest part of that year, and then resume afterwards. So that would be not quite a recession, and we already had a recession in the first half of 2022, a stealth recession where inflation ran hotter than the dollar growth in the economy. So real GDP was down for 2 quarters, fulfilling that definition anyway. It's not necessarily a disaster. It's a boring forecast for 2023, but there are spots to make money. This is not one of them. This is Carvana. With those used car prices coming down, Carvana is the e-commerce facility where you can buy a car conveniently. Here's the punchline. It's down 98% for the year. What happened? The company had gone from $10 a share to about $3.50. Now it's $5. What happened? That company never ever made money. Now they're out of money, and potentially the bondholders get all the equity. So that's one of the things we do here at networthradio.com, like we did with cryptocurrencies, is to say this doesn't look like a good idea, and if you could save yourself a few mistakes, that makes all the difference in the world. Now here's something, a news flash. The 1-year treasury is 4.7% right now. And so you can get over 4.5% in a good treasury bond. The 10-year treasury is only 3.5%. That inversion is why some economists are saying it predicts a recession. It was bizarre trading in the 10-year treasury. But let's go back a second. If you can get 4.5% on your cash in a treasury, which is liquid, we've been having clients bring us their extra reserve cash and say, well, get me that 4.5% because the bank rates haven't gone up yet. So that's one financial planning tip for the ultra safe investor here at McGowan Group YouTube. Thank you for tuning in, and be sure to go to networthradio.com. You can find us there to set your time for a brainstorming session, update your plan for 2023. Thank you for tuning in to Net Worth Media today, and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at Decrescendo, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.